Good evening, everyone. My name is Chris Cooper, known as the Channel Guy Trader, and I'm reporting to you live from Wall Street Trading satellite office down in sunny South Florida. Today's date is Monday, February the 25th, 2013, and here is today's After the Bell Market Summary brought to you by WallStreetTrading.com. Want to first start by taking a look to see how the indices closed the session out here today. We had a bloodbath session here today as a lot of the selling pressure really started kicking up around the last hour after we based from like around 2 to 3 for an hour. Then the market really started breaking down in the last hour across the board, across the indices, across different various sectors and stocks. And we did see some heavy selling pressure today in the market here. So it's definitely something that we have to take note of and gauge a market, in the coming days to see if this is actually going to keep on continuing with the same amount of pressure, the force, or is this just if today was just an exaggerated day. We did gap up today, as you can see here on the daily chart of the SPY, and we sold off to the lows. But it was definitely a day to take note of, and there was no dip buyers in the market today. So let's see how the indices traded to close the session out here for the day. The Dow Jones was down just about 216.5 points here, closing the session down 1.55%. The NASDAQ was down 45.5 points or so, closing the session down 1.44%. And the S&P 500 was down 27.75 points, closing the session down 1.83%. If we take a look at the breadth, we had 5,133 stocks declining on the NYSE, NASDAQ, and the AMEX. We had 1,129 stocks advancing on the NYSE, NASDAQ, and the AMEX. Therefore, breadth was definitely in favor to the bears, to the downside, just about, almost close to a 5-to-1 breadth ratio. And if we take a look at the previous 2 days, if you go back and look at the videos from the previous sell days that we had on last Tuesday and last Thursday, this is the worst breadth reading that we have had in a while. This 5-to-1 ratio with the stocks declining, pretty much outpacing the advancing stocks, by a long haul here. So it's definitely not looking good. We're going to break down the charts right now to see what's going on here and see what we can expect to happen going forward. Now let's first off by taking a look at the SPY daily chart, and I'm actually going to bring over the SPY monthly chart because we got to delve into these monthly charts now that we had a big sell day today. So we're going to maximize this right here. All right, and let's start off with the SPY monthly chart real quick. So we still, we got rejected at that 153.41 level up there, as you can see. All right, let's take a look at the weekly chart. Weekly chart, we are now engulfing on the weekly chart from today's action alone. It's only Monday, and we're already engulfing last week's action. We're not, as far as the bodies goes, we may not be engulfing the wicks, but as far as the bodies goes, we're engulfing last week's weekly candle, the prior week before that, the week before that, the week before that, and we're pretty much trading right now below all these higher closes that we were making back here. This is the only one that we're still above right here, which that takes us around that closing price on that one that we're still hanging above is 148.33. So the SPY trades below 148.33, then we'll be taking this this higher close that we made back here during the week of January the 14th out as well. The one before that, the closing price was 147.07. So anyways, here, one thing you can take a look at right here as well is these little higher highs that we were making right here, and these little lower lows that you can connect right here. So we kind of have like this little megaphone pattern going on right here. Some people call this a broadening formation. Some people call it a megaphone, which all of it's the same. Whatever you want to call it, whatever name you want to put to it. It does look like it wants to go down. Next support we'll be watching closely is going to be around this 147 area from this little prior resistance that broke out. So now it should act as support. So I do think that 147.21, call it 147, is in the cards, and that's what we're going to be looking for. If you take a look at the daily chart here, all right, you can see that 147.20 level comes from this key inflection point right here, from this high, the consolidation that we had right here before we broke out. So that's going to be the back check area. That's going to be the area where they're probably going to, maybe do a little flash sell through that level there, and then maybe close it back above that level. We'll see. We do have the 50-day simple and exponential moving averages coming in around 148.31. That is for the exponential moving average on the daily time frame, and then 147.71 is the simple moving average, 50-day simple moving average on the daily time frame. You make sure you have those levels on watch as well. So if we break down below 147.72, you want to be looking out for that 147.20 level. We break below that, look out for 147. We break below that, look out for 146.39. We break below that, look out for 145. And don't want to give you all these levels down here, but based off of today's action and this wide range bar that we had on the SPY, which was down $2.89 today, and closed down just about 2%, closing the session down 1.90%, closing at 149, closed dead on the lows. There were no buyers at all trying to come into this market. That definitely gives us a clue that we're going to be looking for some more downside action. Volume was pretty heavy today to the downside, higher than the first sell bar that we had from last week's big selling pressure. And you can see volume, every time volume picks up, it picks up to the downside. So that's just something we have to be careful of. And, if you're not good at trading these fast markets, I highly suggest that you just stick in cash and let the market play out and kind of slow down a bit, because it is going to start picking up. And, it may pick up to the downside, may pick up for a bounce to the top side. Either way, this market's a market where you're going to be able to trade stock positions in and out. Whether it be to the top side or the bottom side, you're going to be able to trade both sides of the market and a lot of names, because you're going to have some buyers, you're going to have some sellers, and the volatility that's in the market is going to allow you to do so, and you're going to be able to scout the market and get off nice profits if you know that type of style and that type of strategy, which we do teach over here at wallstreettrading.com. You can contact me at cooper@wallstreettrading.com to give you more details on that. In any case here, SPY's not looking good. One level you want to be watching back for the top side. If we do get a bounce, it's going to be back up towards this 150 half level area right here, which was the closing price from Thursday, all right, and the kind of near the low from Friday. So if the market was to open up flat and we were to rally up there, that would be a good area to go short, looking for the market to get rejected and then come back down towards the lows or something like that. So we have that on watch, people. What else did I want to mention here? Let's see here. All right, so let's go ahead and take a look at the Qs, the triple Qs. The triple Qs are back at this key level, 66.17. Like I highlighted to you guys before, we do have this nice little gap fill that's going to be coming in around here. Let me just fix it up here so I can show you guys exactly where that gap fill is at. I mean, really, this whole area right here is gap fill. All right, but I'm not going to draw it from that. I'm actually going to draw it from these lows right here. All right, to kind of keep everything a little bit clean. But this whole area right here is gap fill. All right, from this gap that we had from the start of the year to this on January 1st, a big gap that we had there. So that gap fill window is going to take us all the way down towards 65.15 on the triple Qs, which I believe is going to be the target. And then we'll see what happens from there. I'm pretty sure we either get a bounce right there. We maybe do a little shakeout below that level, then close right back above it, and that could be a nice little pivot low to work off of here. So we'll see how things set up. We just don't want to get too bearish right now. Even though the market, the breadth of everything's kind of lining up to, it seems like they're going to sell the market. It still could get kind of tricky. So don't put all your eggs in one basket, and make sure you manage your risk accordingly in this market. If you guys recall what I was saying. On the weekly chart of the triple Qs, we do have this possible head and shoulders pattern that's in play here, all right, and we have this little rising wedge that's forming in the right shoulder. So the key level to watch in the Qs is 66, right? If the Qs breaks below 66.17, all right, we're going to see some nice selling pressure all the way down back towards these 65s, which that could happen this week. So make sure you keep a close eye on that 66 level on the triple Qs. I mean, of course, stocks that you're going to look to hit if the market comes down, if the Qs get some selling pressure, of course, is going to be Apple. I mean, the stock has not been able to rally. It's been the weakest one. And this stock, I wouldn't be surprised if this stock was to gap down slightly tomorrow, say like around 439 or so, try to pop up, then fell, and then maybe try to break those 435 levels. So I'm definitely looking for Apple to see what it wants to do. Definitely going to be watching the volume in Apple early in the morning to see if it's picking up average volume than it has been doing for the from these sessions. If Apple's trading with more volume before 10 o'clock to the downside than it has been than it has traded from this prior days right here, that's going to kind of give you the clue that tomorrow could be a big day in Apple to the downside. but we'll see. Level that you want to watch is going to be this 441 level. Break below 441, then you can clearly see that the next level is 435. Or break below 435, well, then we could be looking towards, coming weeks to hit this 427 level. All right, so anyway, let's get back on track here. So the IWM. All right, well, back to the Qs real quick. Sorry about that. Back to the Qs real quick. And if we do pop up on the Qs, you want to be watching, I would say, this 6647 area, 6650 level. We break back above 6650. You want to watch, I would say, around here, around 6684 or so. Kind of these little key inflection points from these prior session days here. All right. What else? IWM. IWM has been the leader. And today it was a leader as well to the downside. IWM was down the most, down 2.21%. And if you guys know, these upward channels usually resolve to the downside. And guess what, folks? We're back at the bottom of that channel with some heavy selling volume that's been coming to the down days here. And the IWM has a gap fill all the way down here at 84.5 or so. And if that gap gets filled, that means that this IWM could come down another $4 and change here, 4.5 points. Taking a look at the opening price from the gap up from the start of the year, that price level, which I have to draw in right now as well, is going to be coming in around. Actually, let me take these out because it's kind of sloppy. I have to clean those up. It's going to that opening price, so that low. I'm going to go off the low. That low is around 86. So 86 could be a short-term target on the IWM to take us back down towards this little gap fill action that we have right over here, which the gap fill is really at 86, between 86 and 84.25 or so. If you guys recall, a lot of people, based on how this channel analysis and stuff usually works, where if we break the top of an upward channel that usually resolves to the downside, we usually get a fast move higher. But this time we had a nice little up bar and we trapped some longs above this key trend line. All right, this key channel line right here from these inflection points. All right, and now you can see we're breaking below the 50% channel line as well. And now we're right at the closing at the bottom one here. So this one's going to be a look for a short rally up, maybe early in the morning or in the afternoon or something, and then we look for it to try to roll over back to the lows here. You want to see, but definitely, in my opinion, I think the market is in sell the rally modes. I think the dip buyers are not home anymore, because if the dip buyers were in today, they would have held the market when we try to bounce, when we try to get the first bounce off the 1507 level. And then when we try to get the bounce off the 1500 level. If the dip buyers were really in the market, the ES would have held the first bounce level at 1507.5, or if anything, would at least held the second one around 1500, which was the key level anyways to begin with. So therefore, that kind of tells you that the dip buyers are kind of back in their caves, and now the bears are trying to smack the bulls in the face and see if they can take them down more. All right, so let's take a look at the dollar futures here to see what the dollar did today. The dollar, I'm pretty sure, was to the top side today. Yes, it was. Nice volume coming in the dollar. And the dollar did hit our top of our target right here for our next target that we gave you guys once we broke above this area right here. In this area, the target was the top of this little supply channel, all right, or this little supply pocket area, whatever you want to call it. And now the next resistance is around 83. All right, 83 looks to be the next resistance. If you guys recall, we had this little head and shoulders pattern that was playing out right here on the dollar futures chart, and then guess what? It broke. The back test held for like one day, and then it broke out. Then we started breaking back above these key levels, and just kind of let you know there's a little short squeeze going on in the dollar off of this failed bearish pattern that looks like it was going to play out. And if we take the euro, which I posted this on our Facebook and our Twitter and all of our other networks that we have for our distribution. For the social media, you can see that the weekend review video that we did showing that the target of the euro dollar is going to be down here towards this 130.55 level on the euro. Well, the target got hit today, folks. And now we're back, sitting back on top of this prior channel right here that we broke out of, which means that this key trend line that we bounced off today is relevant, which means we could probably try to consolidate here and base for a bit before we try to break lower. All right, and this action right here is a bull trap action that we mentioned here from that key trend line that we showed you guys. And I can show you guys again right now since I'm talking about it here. See here, two-year daily chart. And take off these channels real quick. All right, so from the channels, from the little breakdown that we had back here in May of last year when the euro broke down out of this nice little triangle pattern here, this trend line right here is still important. All right, and now if you go here, you can see that we try to break above that trend line. Sorry about that. We try to break above that trend line, but guess what? We were not able to hold above it, so we trapped some longs right here. And now the euro traded back down inside a little channel that we had right here. It broke down, and now all these longs right here are trapped, and now they're dumping the euro. And, you know, if I traded currency, I would be making a lot of money right now, but I don't trade currency. I do track the currencies, though, along with the dollar and along with the equity markets and commodities to position our group of traders on the right side of the market and make sure that they have the best research they have available to them out there, you know, to try to make a profit in this market here, which I think we've been doing pretty well this year so far, maneuvering you all that watch our videos and everything and everybody through the market. So the euro could get a little short-term bounce right here. You know, it is coming all the way from these levels right here, 137, you know, all the way down to 130.55. So it could get a little bounce. If it does bounce, we're going to see if the euro was to bounce up to these levels right here. Then if it was to get rejected and put in a lower high, then that would be the goal that we could probably try to break to this level right here. In other words, euro is at some minor support right now, and we're going to have to gauge it, you know, going forward off these key levels here, along with the dollar and all that other good stuff. All right, so let's take a look at the gold futures. Gold futures today here. And this video is turning out to be long because a lot of stuff to go over. Gold futures got a nice little bounce at the bottom of the channel right there. You can see it did a little flash to the channel and then recaptured the channel there. So now we want to see where is this thing heading to. It's kind of still below these little short-term moving averages here, the 8 EMA and the 5 EMA. But we have the 20 EMA around 16, 22, 16, 23. All right, if you take a look at the GLD, if you're a GLD trader, all right, the GLD got a nice little bounce off this 152 area. And we did mention the fact that we were not looking to get short gold down here, you know, on the weekend review video because it was just too extended to the downside and it was on top of support. So now, if you're a gold bull, you know you probably bought some on Friday or last week when it was down here. But if you're a gold bear, you're waiting for it to rally to see if it's going to put in a lower high or whatever the case may be. So play that sector smart. Let's take a look at the GDX. The GDX of gold miners, they were up 64 cents today. Got a nice little bounce. Same scenario for the GDX. We're going to be looking to see if this thing puts in a lower high. Remember this, you know, make sure we take into consideration that it's still below all these key moving averages, and it's still below the 20-day moving average here, which is you know, still lining up to match up. That's still right below its key support around 41.47 that broke. So now it's resistance, not key support. It's resistance now. Sorry about that. Key resistance. Prior support now becomes resistance out of this little tight 3-week range that we had here. All right, so we're going to be looking to see if the GDX rallies, puts a lower high in off these little lower highs, and then rolls back over. Or if it was to break back up and get back above 41.50 and stabilize a bit, then that would be a different story, and we'll have to keep an eye back on these gold miners. What else here? Silver, SLV. Silver trying to get back inside that nice little downward channel that it has in play right here. All right, from this inflection point, this inflection point, this inflection point, this 29 key inflection point. And this could be a possible bear trap. We'll have to wait and see. I really would like to see silver get back above 29, though. Copper. Let's take a look at copper. Copper was down a little bit today here. And one thing to watch about copper, ladies and gentlemen, is that it's coming back into this little channel. Oh, sorry about that. It's coming back into this little channel right here. All right. Therefore, if it was to hold below 354, this copper is going to be looking to come back down towards 345, towards this area down here, towards this prior support. If we hold below this key inflection channel that we had in play right here. Okay. Usually with a back test and it held right here, but at the same time, remember that if we hold below our key level right here as well, this little yellow band that I have right here, then we will be looking to go back down towards this 345 level as well. And some copper stocks that you can take a look at is FCX. All right, FCX is looking weak to the downside. We'll be definitely looking at shorting FCX tomorrow. And the reason why FCX is on our short radar, and we've been calling it on our short radar, is because if you take a look at the 60-minute chart, all right, you can actually see what's been going on here with FCX. All right, we actually bring up the 90-day hourly chart here. All right, you can see it had this nice little rising channel. All right here, the channel line broke. It said it traded sideways. It back checked that channel line right here that we had. Got rejected, and then it sold off. Then it broke down more. It's been breaking down. Now it traded in this little 3-day range here, and it broke down in the last hour. So FCX holding below 3170, holding below this little 3-day range. Support that it closed below right here. We're definitely going to be looking to short this mañana, which means tomorrow in Spanish. And if you take a look at the daily chart, it formed a nice little rising wedge, which is the reason why we were shorting FCX last week, earlier in the week. All right, and if you guys were paying attention and you guys bought some puts, you guys would have been doing pretty well in that. Of course, we didn't buy no puts, and I didn't buy any puts, but I was trading it intraday to the short side last week, and it's going to go back on the radar now that we have more confirmation that it wants to go down after it chopped around for 2 days. This is the next day down. And now we're going to be looking for that confirmation day down tomorrow for the close. That will signal it's going to go lower, and that's probably going to bring in more money to the downside in it. So we'll see how it tracks here. But just so you guys know, we have the sector working for us. We have copper, starting to get weak, so that's working for us for the short on FCX. We have gold kind of in a limbo, and they're involved in gold and copper and even some energy now that they acquire those some of those energy companies out there, and they're based in the commodity sector. If commodities are getting weak because the dollar breaks out, FCX is going to be one that people were buying earlier because I guess they thought it was a bargain, and that they thought it was going to be good because they acquired these energy companies, and now these commodities are getting sold. It's going to be a go-to stock to hit to the downside. 60-minute pattern is there. We'll definitely be looking to trade this tomorrow in our chat room. Let's see here, FCX. So let's take a look at crude oil. Crude oil futures, broke down today a little bit here. They were down 84 cents today. They're going to be looking for some support around the 89 level here, and that looks to go down. If we pop up to the top side, watch the 94 level. 94 is a level that we need to get back above so we can get back inside this little previous, back inside this little supply channel that we had right here that we did try to break above, but we were not able to get back above 98, and now we're back below that 93, 95 level, and we're actually back below this key 93 level as well. All right, if you take a look at the USO, for some of you home gamers out there that trade the USO to trade crude oil, all right, you can see the USO is back down here as well now, and it's back near that little support from this little range right here. And, I really don't know what the clue is in this one right here for the fact that the crude oil futures, they were able to trade to the top of the supply zone while the USO was not. And you can see they have the same pattern for the supply zone and everything, just like the crude oil futures. Maybe it could be the way the USO is structured or the contango or something like that. But either way, this is crude oil looks like it wants to pull back a little bit more. And looking at the USO, it looks like it wants to pull back a little bit more as well here. So 33 is the key level to watch on USO. There's a gap fill on USO around the 32.23 level. Call it 32 if you want. What else? The volatility index. Can't forget about the VIX. The VIX had a nice move up today. The VIX was up 34% today, guys, and we're a point underneath 20. And, 20 is the key level on the VIX. 20 is usually the average level on the VIX, or historical average, I believe, on the VIX, if I'm not mistaken. And that's what I was told at a investor business daily seminar that I went to where they had some, younger guys that's kind of the same age around my age. Well, he was actually a little bit older than me, as I'm only 26 years old. But he had, he had some analysis on the VIX, and he was showing how the volatility index is, average price of the volatility index historically is around 20, and really until it gets above 20, you can't, really unless it's above 20, there's really no need to have too much fear in the market. But once it starts holding above 20 and closing consecutively above 20 and continuing to make higher highs, then you have to be a little bit worried. And if you guys recall in the week in review, I was saying the fact that if we can get a couple of consecutive closes above this all this consolidation that we had right here from these closing prices, this could be telling us a little different story here. All right, you can see how we've been, kind of trading in this little range between 15 and, having these little closing prices around 15 and 12.25, and now today we're at 18.99, call it 19. So next target on the volatility index is up here towards 23, so we can see a nice short-term spike in the VXX, the VIX, and I just saw consistent buying in the VXX today, and that's a bearish sign right there in itself, because usually the VXX sells off near the end of the day. So we'll see. What else here? So some key stocks real quick. I know this is a daily video and I'm making it longer than it is because there's just a lot of things to go over. Hopefully you guys are still sticking with me because you're going to be able to use this information tomorrow to actually make some money. Amazon, I already went over Apple. I already went through Apple. Amazon's, it's back below this key level right here. It's back below this key 262 level. So we're going to be looking at Amazon tomorrow for a short as well, expecting it to come back inside this little prior little air pocket demand zone that we had right here. It's a demand zone. Why? Because this was like a little congestion right here. We had a little congestion right here, and then we bought it up, and then now we were kind of hanging above it a little bit. They were chopping people above and below that 262 level, for the past 1, 2, kind of 3 weeks there. We held above it a little bit last week, and now we're back below it. So therefore, Amazon, if it continues to hold below 262, we're going to be looking for Amazon to pull back a little bit towards 250. If it gets back above 262 and the market tries to catch a bid and this thing catches a bid, we'll be looking for Amazon maybe to pop back up towards the range and do the same thing that it's been doing for the past couple of weeks here, which is trap some shorts. Every time it pops below 262, breaks below 262, then come right back up. So we'll be watching Amazon to see how it reacts around that 262 level. IBM, I was actually looking for IBM to get a bounce today, but this did not happen as the market was pretty weak. And now you can see that it pretty much continues to get rejected at this key trend line that I have here marked on my chart from this little prior channel that it had. And I'm actually going to make these undotted lines so you guys can see a little bit cleaner here. And now we're actually, I think if you want to short a big cap technology stock, it may be IBM. I actually thought IBM was going to try to get a bounce right here because it actually held up pretty well while the market got sold last week. But now, today, it actually got slammed and actually made a lower low from last week's lows already on a Monday. So gap fill on IBM is right here at 195. All right, and what's that, 195 or 196? Excuse me, 196. And then if it was to break below 196, the next support level is going to be at the bottom of this channel right here around 194. So we have IBM on watch as well to the downside. If you take a look at the 60-minute chart on this one, this one was basically gapped up a bit and sold off for the whole day there. 198 is the level to watch on this one here. Triple D, they had earnings today here. This stock pretty much, held up pretty nice at this 30 level. It got smoked intraday, but then it bounced off the lows. Take a look at the 15-minute chart here. This thing sold off for the first 2 hours and rallied up the rest of the day there. But either way, when these stocks gap down like this, so much of a monster gap, what's really your benefit of shorting a stock all the way down here? Especially for a swing trade. If you're shorting it intraday, that's fine because you're an active trader. You can catch the moves intraday off the key levels and all that other good stuff. But if you're a swing trader, there's no point in taking a swing short and triple D down here. Let me take a look at some of these little BS stocks, HLF, NUS. All right, nothing going on there. All right, some of these energy stocks, Schlumberger getting smoked ever since it formed this nice little bull trap up here above the $80 level that broke. Trapped those longs up there, and now they're feeling some pain. We call that a bull trap. What else here? ExxonMobil, this one was kind of holding up well, but now it's back below that key 88 level. Chevron, a stock that I was looking for it to break out. Did a little fake breakout trap right here, then pulled right back in and closed on the lows. Visa, the same pattern. Visa kind of has like the same trend line pattern as Chevron right here, and Visa did the same thing. All right, tried to break out and then fell right back in. So, those stocks still look pretty good. Visa still looks pretty good too, but at the same time, we got to make sure that we know that some people are probably trapped in this Visa up here. But really, it's not a short until it breaks below 154. But just want to let you guys know some people got trapped today trying to buy this above the previous day's highs for a quick breakout, and that didn't happen. That's about it, guys. It's a long video. I have a lot of stuff to take a look at tonight for some research for our members in our chat room to make sure that they're on point and on the right side of the market tomorrow like we try to do every day. Hope you guys had a great day. If you would like to get access to our free chat room, go to wallstreettrading.com. Fill out the form for the 14-day free trial. We do have it fixed now, so as soon as you fill out the form, you will get an email sent to you with the credentials to log into the room. I look forward to seeing you there. You will be greeted by me and my other 2 partners that moderate the room, and we look forward to having you. Have a great day, guys. Cheers.